I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
The Royal Bank of Canada has released a study that they say shows that the cost of owning a home in Vancouver last year was 78% of your income. Now it's 88% of your income. How accurate is that? Because really, if you look at the real hard numbers, it could be more than 100%.
I'm sure that I could find numbers, Jim, that I could show you it's 200%. But this Royal Bank affordability survey, they have done this, I believe, for 3 decades, Jim. It's a long time survey. And when it started, which I believe was back around in the late 1980s, basically the same time that I started my sales career with my parents. Back then, they were measuring a bungalow house, so a single floor home, and back then the median income home buyers at that time were actually in a category of their life where they were buying a bungalow home. And the Royal Bank Affordability Index back then was actually quite legitimate. Then throughout the 1990s, as the demographics changed and the style of homes that were built in Canada started to change, meaning the housing stock started to change, measuring, it gets to a point when you are attempting to claim that a median income family is going to be able to buy a bungalow home. And that's simply not true. A bungalow home now is in a neighborhood that 30 years ago, it was a new neighborhood or it was an older, mature neighborhood. And as your housing stock grows, those homes in particular, the land that they're on, increases in value at a higher rate than all other homes that are being added to the housing stock or any other homes that existed at that time. This is one of the reasons why older condominium buildings, never gain as much price-wise as a newer condominium building does. And your listeners really, Jim, this affordability, first of all, just throw this nonsense out that the Royal Bank says. It can be debunked in about 30 seconds by anybody with a calculator. But the understanding that comes from this affordability report is that what you're buying today is not the same home that a median income family would have purchased back in the 1980s when Royal Bank first started issuing this report. And then when you had the soaring interest rates, the interest rates had been even declining when this report started. But at the end of 1989, interest rates bumped up again. They actually bumped about 2% over a very short period of time, within a year, which is what caused the housing correction to roll over in Ontario at that time. Your listeners just simply need to understand that the housing stock is constantly improving. I was talking to this with my parents over the long weekend. Today's home buyer, for the sake of the argument, Jim, in a single detached home, they no longer want a home with 8-foot ceilings high on the main level. They now want 9-foot high ceilings. In the 1970s, when the energy crisis was on, houses were being built in Ontario with second floor bedroom ceilings of only 7 feet 6 inches. because they thought energy prices were going to stay high forever, and they had to try to conserve. And the most logical way you do that in a house is you lower your ceiling height in climates where you've got to worry about the winter like you do Ontario here. And when those houses come on the market today, those houses never hold their value the same as the newer style houses do. And that's really what the crux of when they're using a housing type from 30 years ago that really is not relevant today. And certainly when you look at the demographics of the overall population, the median income earners simply are not the same ranked in the demographic groups the same way that they would have been 30 years ago. So you need to break it down. And when you break it down, yes, rising interest rates for those people who have already purchased a home will make your home less affordable. You will consume a higher percent of your income unless you are getting raises at least inflation. And even then, interest rate rises can wipe out even those kind of gains. But it really has no truth to what is affordable and what is not affordable. That is an individual to individual basis. And a true affordability index is possible. Like, we could create one, Jim. But it goes municipality to municipality. It goes to housing type to housing type. It goes from the housing age to housing age. People in our home buyers programs, when they're going through the program, the reason why that we can't have a single program for everyone is if you just simply change municipalities. What's affordable in one municipality is not affordable in the other, even though the house price is identical. So Royal Bank does not take those things into consideration. And for that matter, listeners really should not listen to the hype that is generated from that report.
Ross, we have a rare day when we were getting real estate numbers for both Vancouver and Toronto. What can you tell us about it?
You really hit me at a day here. Your listeners need to understand what is going on right now. The real estate boards of the Real Estate Board of Greater Vancouver, Fraser Valley, Toronto Real Estate Board, Calgary Real Estate Board, all work in conjunction with one another in terms of how they time their press releases. If your listeners had gone to the Treb Home website this morning, they would have found that there was no service available. You're talking the largest real estate board in North America, and their real estate services were not available, meaning someone who wanted to access the previous market reports, they couldn't access them on the site. At the same time, the Vancouver Real Estate Board releases their stats today. The Toronto site is now back up live. This is not a fluke. This is a concerted effort of the real estate boards to control the message. Now, your listeners need to understand, I am not saying there's anything wrong with what they're doing. What I'm saying is that you have to understand that is exactly what they are doing. They're trying to manipulate the conversation to ensure that commission earnings for their members are as highest as possible. So what you have this month is, you have Vancouver releasing today, Greater Vancouver, and tomorrow you have the Toronto Real Estate Board release. Vancouver's real estate is hit with about a 28 to 30% drop in sales in Greater Vancouver. The incompetence of the economists at the real estate boards and the realtors that work there and the boards of directors and everyone else involved in the real estate industry, they don't know why the sales dropped by 30%. We have told you on this show exactly why sales were going to drop once again after that $37,000 boost given by the Liberal government to first-time buyers for an interest-free loan was removed from the equation, which it has now been removed from the equation. Immediately you get a plummeting a number of sales happen. What the Real Estate Board of Greater Vancouver and Toronto know is that tomorrow the Toronto Real Estate Board is going to release, and their year-over-year sales are not going to have declined as much as they have over the previous 6 months. And this, our market must be stabilizing myth will become the national conversation. Your real estate boards play this game, Jim, month after month, after year, after decade after decade. Now, I can't really honestly say prior to 2003 was this going on, but I know that it's been going on since that time. And you've got a prime case today. So you have a 30% drop in sales in Greater Vancouver. They're blaming it on the B20 rules. They're blaming it on the foreign buyer tax. They're blaming it on everything. The only thing they don't blame it on is the $37,000 first-time buyer loan. And that $37,000 first-time buyer loan was the reason why condominium prices had grown post fall of 2016. So as the rest of the housing market was crashing in Vancouver, as we had said in your show, in the fall of 2016 and on other media outlets in Vancouver, and condominium prices continued to increase, the only reason that happened was because of the $37,000 boost generated from the first-time buyer interest-free loan. That is now gone. But that's okay, because tomorrow the Toronto Real Estate Board is going to say things aren't as bad in June as they were previously. Things are getting better. What your listeners need to understand is this. Real estate boards have a legal obligation, as we've said in the show, Jim, over and over again, to get the sellers of real estate the highest price possible. That's a second legal obligation that they have. They sign a contract that makes that a legal obligation with every single seller who posts their home in the MLS system. The first obligation they have is to get their members as much commission as possible. And as such, framing the real estate market any way possible that will generate more sales, regardless of the impact to the consumer, is the legal obligation of the real estate board. And that's what you're going to have happen today and tomorrow. So your listeners are going to hear tomorrow, I'm telling you right now, when the Toronto Real Estate Board comes out with their publication, they're going to be saying things are better in June than they were in May, March. They are going to go back to their seasonally adjusted numbers on top of that, which actually they may not go to seasonally adjusted, because now seasonally adjusted starts to catch up with them. So that everybody in Vancouver believes what the real estate board in Vancouver said, blaming it on B20, foreign buyer tax, instead of simply stating, this is how a real estate market functions. It is the trading cycle.
We'll have more with Ross Kay right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome backwards. Speaking with Ross Kay. Ross, last week we reported on new listings and that the market calculations were being skewed by how realtors were reporting them. Is there a more accurate way to know what's going on in your market without relying on these numbers?
First of all, Jim, with that last cough, I want to say something to you. Ever since I've been on this show, you've been such a professional person helping me along the way, and I just learned how difficult your job must be, because you get a cough and you're trying to go on with the show and it just doesn't work. So I can't imagine the things you've been through over your career, but I just wanted to give a shout out that thank you very much for all the patience you've shown me over the last couple of years.
Ross, you're such a pro, it's pretty easy.
Mutual stroking of the egos there, yeah. But no, seriously, Jim, thank you very much. So your listeners need to understand, as we've said repeatedly on this show, no matter what information they are given from organized real estate, economists, banks, anyone, anyone who's speaking in public, what we have learned and what I'm talking industry-leading economists in the housing sector have confirmed to me personally that what is really not known about a housing market is what we talk about here on the show, and it's real. These people really do not know the fundamentals that drive a housing market. And that's why you get a lot of the conversations happening, such as, oh, everybody should have access to all the sold information. What I can tell your listeners is this. It doesn't matter what individual homes sell for. Those homes have nothing to do with the market, and they should have nothing to do with the decision you're going to make in home ownership. You need to know the direction the overall market is going. There's the old analogy of when the water rises, everything rises with the water. Something about a cork. So, when the cork rises with the flow of the water. A housing market is the exact same thing. And if you're focusing on what your neighbor sold for, or you're focusing on a house on a street that you'd like to purchase that home on, and you're not knowing what's going in the overall market, what you're going to do is you're going to make a mistake. And it's possible that when these stats were created decades ago, it's possible, the people who created them, my family was part of the group then, we really didn't ever have an understanding or an idea that the public would be relying upon them. They were simply talking points that would allow a little bit of press to happen. We never expected people to make a decision based on it, but that is what's happening today. You're reading in the newspaper about now how listings are being relisted and the old listing is canceled. I have said on your show over and over again, that's why you can't listen to the new sales to listings ratio. It's why there has never been an academic study done proving the validity of any metric, any percentage being a buyer's and seller's markets with the new listings to sales ratio. It's why you can't use days owned, monthly inventory. It's not why you can't have days listed for sale. Those numbers don't mean anything. The people that are now coming out in the marketplace saying, "Oh, well, this is skewing the numbers," it always skews the numbers because those metrics all naturally move in tandem with the housing market. The practice of the individual realtors, the selling realtors, changes with the market. It changes with technology. It changes with everything. The commission rates alone. Your listeners don't understand. Commission rates can range as much as 2%. So in other words, instead of 4%, they're 6%. The staggered commissions, whatever. There are commission bonuses that are paid. The listing agents change their practices, and they talk to their sellers, and they convince their sellers to take action. Sellers almost never, Jim, take action on their own. They wait from the input from their listing agent. What you'll notice, Jim, your listeners need to really understand this. If you check and see which realtors are appearing in newspapers as being talked about as experts, the realtors who appear on television, and then you go and check the number of listings those realtors have on Realtor.ca, and you're going to find generally they don't have any. They might have one. They are what we call one listing or no listing brokers. They have nothing to lose. If you look at the high selling realtors in your community, the people who have a full page of listings to themselves, those people never say a single word to the public. They never take an interview, even though they're the ones with the most experience. They know the most about the market. They know the most about what's going on right now, but they never talk. They don't talk because they know the rules that govern the sale of real estate state you cannot talk. you must keep your mouth shut. And they can't afford to lose their business. All the realtors you're watching talking on TV down in Van City condo guy, the kid doesn't know what he's talking about. The only reason he talks is because he's got nothing to lose. In other words, he's such a low-performing realtor. He sells so few homes that he has nothing to lose. He's trying to build a business artificially. In Toronto, we've got Relosity, John Paladis. This guy, for almost a decade, has spewed the same nonsense to the public because he has nothing to lose. He claims to have, I don't know, like 40 realtors. You go on the realtor.ca and check how many listings his brokerage has. They've got 2 listings. They're what's called failed brokers. So when these people are now going to the public and saying, oh, well, the only reason they're doing that is they want to get business. They want you to think they know something that no one else knows. The truth of the matter is they're the most incompetent realtors you can find out there. They're the people, if you're going to use a realtor, they're the last realtor you should be using because they don't know what they're talking about. The problem is provincial regulators are not charging them because of their complaints-based processes. That said, all the comments that they're making now, they should have been making 5 years ago because the exact same phenomena was happening then. It intensifies the moment the market slows down. This is nothing new. This has gone on since the 1980s, since the month that I started real estate. It is exactly the same as it always has been. The only difference now is people are pretending that there are realtors or real estate salespeople or brokerages out there that represents buyers. And what I'll tell your listeners is this. There is one real estate brokerage right now operating in Canada today that fully represents buyers. There is not another one out there. If they were, they would be telling buyers right now, do not buy a home because tomorrow that house is going to be worth less.
We'll have more with Ross Kay right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Canada plans to radically ramp up its immigration policy and allow more people into the country. Do places like Toronto and Vancouver have the capacity to absorb those people? And also with a 20% foreign buyers tax in BC for most urban areas, can they even afford to buy in BC?
Well, Jim, I think when we're talking immigration, what you're talking about is an artificial growth in the population. And if that happens, where governments have not planned and increased the housing stock, then you are going to have problems with supply and demand. What Canadians don't understand is this. There is already a surplus of housing stock out there. Now, the surplus is not ridiculous. It could be eradicated in a year or two. But there is a surplus in housing stock. When you start hearing in Vancouver, Jim, the talk of vacant homes, okay, vacant homes have never existed in Canada before because you don't find vacant homes unless they're going to be torn down by a builder and a new home is going to be built there. Right now, you see vacant homes. In a housing correction, those vacant homes are put on the market. You have inexperienced investors, young people, or boomers, anybody, meaning someone who does not know how to handle an investment of real estate, in real estate, they have purchased condos from builders. And they're agreeing to do that because they believe there's going to be a gain. When they realize that gain is not going to happen, they put that house in the market. This is where you have to understand with supply and demand. It is a very complicated calculation to make, which is very frustrating for us, Jim, because we go to extremes to measure supply and demand. When someone enters the buyer program, for the sake of the argument, at the wealthy homeowner, we look at that specific buyer and we look at how many homes are in the marketplace where that buyer may be interested in buying. We have members who are interested in certain parts of Vancouver where there are fewer than 300 homes available to be purchased in the home ownership market. Okay? Some of that housing stock, not the 300, the reason there's only 300 is because some of the housing stock has been purchased by foreign buyers. It is now owned by a foreign owner. That property will not come back into the marketplace. That is a removed property. As the housing market corrects, foreign buyers hold on to their housing stock. They let time eradicate the problem. And they come with a mindset that that's exactly what happens. Canadians don't do that. As soon as the Canadians see the housing prices start to decline, as they're losing money, they panic and they put the house in the market, which is how your housing prices quickly drop, as they have in Toronto. Certainly in some parts of Toronto where this has gone on, they have dropped really quickly. So immigration puts a demand pressure on the housing stock. Well, initially that pressure is rental housing stock, okay? Immigrants initially rent. Then, after a year or two, where they know where they want to live or where their job is going to be, where they want to put down roots, then they'll move into the home ownership market. Unless your government is modifying, changing, growing your housing stock in advance of new members of our population needing a place to sleep at night, you are always going to have imbalances. These imbalances create pressures, and they also cause housing bubbles to form and housing bubbles to collapse. Immigration must be understood, but when you hear realtors saying, "Oh, there's a new 100,000 people going into the city of Toronto per year," or 115 new people moving to the city of Toronto a year, and that's why the housing market is going to keep going. If that was true, how come housing sales dropped 30%? If that was true in Vancouver, how come housing sales just dropped 30%? How come the real estate board just went back now to the old stat where they compare this year's sales against the previous 10-year sales? I hope your listeners understand how ludicrous that comparison is, Jim. Your housing stock, the number of homes in your local marketplace may have increased by 30% over the last 10 years in certain municipalities in Canada. 30%.
One of the big problems in Vancouver has been the lack of rental accommodation being built. We just had a television story where one of the BC Lions who came back to town from Montreal can't find a place to live with his wife and 2 kids.
Exactly. And remember when the CFL in the old days, Jim, where the CFL players used to work in the community and where the community would find a place for that CFL player to live? Well, we're back to those days again. That's what happened. Your Vancouver housing stock, the problem with foreign buyers, it's got nothing to do with house prices. As I've said on your show over and over again, and I'm sorry, your listeners, I know, don't want me to say this. They don't want this to be true. But this is true. Foreign buyers do not raise average selling price or the selling price of houses. What they do is they remove homes from the housing stock. If they remove a home ownership home, a home that previously was owned, that effectively could remove 2 homes from the rental market because that's the way the market works.
Ross, you suggested in the past if you wanted to have some kind of a metric that includes foreign buyers, instead of having a foreign buyer tax, have a foreign ownership property tax.
Yes. Look, my personal opinion is I do not believe foreign non-Canadians should be allowed to own Canadian residential real estate. That is my personal belief. after working with thousands of families, working with the wealthy homeowner, studying housing markets for over 30 years, I know Canada as a nation should not allow foreigners to own Canadian homes. If they want to own commercial real estate, that's a different story, but not Canadian homes. Even vacation properties. Maybe there's a certain amount of those the government wants to decide to allow foreigners to own. I don't know. But what I'm saying is Canadian homes should never be owned by foreign owners. The government should institute any policy that it can to make owning a Canadian home, if you're a foreigner, very, very financially unattractive. Because once it reaches a point of being so unattractive financially that it makes no sense, a Canadian family will be the family who moves into that home. It won't be owned by a foreigner who may live there part-time, who may underutilize the home, or who may even leave it vacant, because they're holding it as an investment. They're holding it as if it's gold. Homes are not gold. If you want to do that, invest in the precious metals. There's experts out there that can help you with that. Your home is a totally different asset class, and the governments need to make it so unattractive for foreigners to own a Canadian home, they simply won't own them. And the ones they do own, they will quickly liquidate. When we created our right to own policy over a year and a half ago, which was supplied to Eby at that time, which is still on rosk.com website. The right to own policy is still there. It was a thorough sandbox that should be instituted by governments to make sure that Canadians own homes. You need to look at every single point of entry into the market and reason why people enter the market, foreigners, and you have to counterbalance those financially. You have to remove any incentive they have to do that. Governments are not doing that today. Now, that said, Jim, really doesn't matter. We are now into the down phase of the housing market. You just had a 30% drop in sales in Vancouver. You have just walked off with we will now Toronto real estate sales next tomorrow, Jim. You're not going to hear this anywhere. So here's a bonus for your listeners today. At the end of the show, here's the bonus. Toronto real estate sales are going to be about 50% of what they were 2 years ago. Toronto real estate sales are going to be about 50% of what they were 2 years ago. For Vancouver real estate sales reported today, were approximately 50% of what they were 2 years ago. Who in their right mind would pay escalating home prices when the market is 50% slower? Cut in half. So when you're reading tomorrow's results in Toronto, they're going to be comparing June of last June against this June. You need to compare it against June of 2016, and then you're going to see what is really happening with the housing market. Don't be surprised to see a blogger, a realtor, and television who listens to this show repeat this in the coming days.
Ross, thank you so much for chatting with us.
Hey, thanks for having me back, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or guests like Ross can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.